Welcome to Giving You More Than Numbers, CASS's business support podcast, your go-to resource for practical business advice and expert insights.
Welcome to Giving You More Than Numbers, CASS's business support podcast, the show where we break down business advice into practical, actionable steps just for you. Whether you're scaling up or just getting started, we're here to help you make smarter decisions. I'm Paul Barnes, and today we're diving into financial KPIs, that's key performance indicators, and how they can drive your business forwards. Joining us today is Paul McKay from Xero and Jacquie Hale from Vector Business Coaching, a client of ours. Welcome both, and let's get started. A little introduction, if you would, for each of you. So we'll start ladies first. So Jacquie, if you want to tell our viewers a little bit about you.
I'm Jacquie Hale. I run Vector Business Coaching. It's not my first business. The first 12 years in business was spent building a super successful TP hire business. So very different from what I do now. But I'm a business coach who's been there, done it and got the t-shirt, which is why I love working with business owners who also want to grow their business and manage to get themselves out of it, as I have done, and do what they want to do.
Fantastic. Thank you. And Paul?
Yes, my name is Paul McKay. I'm part of the Xero UK team. I typically look after accounting practices in the UK and help them digitise, and been working with Paul and the team at CASS for the last 5-6 years.
Yes. Fantastic. Brilliant. So, as we said at the start, today's all about key performance indicators and how they can help shape your business for growth. So, Jacquie, I think actually the first place to start is what KPIs, key performance indicators, would you expect your clients that are on their journey with you to focus on to target growth?
Well, the key things that you need to look at when you're targeting growth is that your revenue is going up and that your costs are not going up faster than your revenue. So that it sounds really obvious, but if more money's going out than it's coming in, you've got a big problem from the start. So when I start working with business owners, the first thing we do is look at their P&L, and most of them go, oh my gosh.
So by
where do I
P&L,
start?
profit and loss?
Your profit and loss page. And I do like working with Xero because it's lovely and clear on there, but you'd be amazed at how many business owners don't ever actually look at their profit and loss. So the first thing we do is have a look at what the revenue is that they've brought in over the last 12 months. We might even look at the exec summary and see how many invoices they've used and what their average order value is. And those are really good starting place when you start deciding about growth, because you need to see whether you've got revenue that needs to go up, or actually you've got great revenue, but you're spending it all. And then you have to obviously look at the costs and compare those to see where you can make savings.
Yeah, I think sort of clients that we've typically sort of onboarded and come on the journey with us are either in that realm of it's a spreadsheet and the accounting software is not there, or they literally run their business off their bank account and their bank account says, I have got £10,000 in it. Fantastic. But actually, what have we committed to in that £10,000? Is that something that you see, Paul, with or feedback from other accountants that you support around what typically their clients are after?
Yeah, I mean, it's always interesting. I deal with a lot of accountants where some firms do it in-house, and some firms really actively encourage their clients to engage with Xero, and it's those that really engage with Xero where we see the most success. And it's great because the first screen you're actually presented within Xero is just a snapshot of your business, and if you can just get your client to look at that gives them exactly what you guys have just been talking about. So just a snapshot of their bank account, how much money they owe, how much money they're owed, and also just key metrics of where all their money's going in the business. So if they can just see a snapshot, it really gets them more interested in the finances in their business.
Yeah.
So yeah, we see it day to day.
No, fabulous. And I think in terms of those KPIs, we've touched on actually my profit and loss, but sometimes it can go a little bit deeper than a profit and loss. And our experience is, yes, if we're making money, my bottom line, which I think is the phrase that we're all interested in, will say a number, but sometimes that doesn't then counter or reflect what's in the bank. So sometimes I think there's an element of, well, looking at where else have I spent my money? So is it on capital equipment, so motor vehicles, computer equipment, all of those things. So how do you measure with your clients beyond the P&L? So I think where we're trying to go is actually what other KPIs, what other metrics should we be asking our business owners, our clients to look at beyond that magic bottom line number?
If you want the absolute truth from a business coaching sort of aspect, is I get the customers, first of all, to not focus on that.
Yeah.
I get them to focus it back on themselves, because let's be honest, we all went into business to make money.
Yeah.
We're not here just to fill our day. So the first thing I always start with my customers is we plan out what they want from life, what they want from their business. And it's really important. And you've probably heard of Mike Michalowicz, who's written the book Profit First, and using the Profit First model, I would say to them, so what profit do you want this year? What money do you want your business to give to you? And the problem with the traditional way and with businesses not like yours, accountants who are, let's say, a little bit old school, is they hand over the accounts well after like history, what's been going on. The beauty of businesses like yours, where you're actually monitoring, on a monthly or even more frequent basis, what's going on in their P&L and what's going on in their business numbers, is they've got a much, much quicker handle on seeing alerts and alarms and when things aren't going the way they want. Yeah. So we start with, what profit do you want? And that's a really key focus, because then they know what they're striving for. But that's a big number probably. Yeah. So then they have to break it down. Well, okay, so if that's the profit I want, what's the costs I've got to also pay for? Yeah. And what's the cost of sale? Which, again, a lot of your listeners might be like, well, I don't know what my cost of sale is. But that you can all find in the accounting software, can't you? And that's something you can help the guys with to work out, well, what is it costing for me to deliver my product or my service? And I'm sure Xero's got a whole section on that, hasn't it?
There is. On the dashboard, again, there's an account watch list. So if you are wanting to keep an eye on particular areas where you're spending the most money, then that's a good area to look.
Yeah.
And I think connected to that accounts watch list is that ability to go, well, actually, if that's my end number and I know that my cost of sale is X percentage or X value, what you're then able to do is start to use Xero to put in high level initially budgets that you can then start to report against. So whilst we're talking about KPIs and key performance indicators, all of those fancy terms, sometimes it's a simple, I want to turn over this much per month. Here's what I think my costs are. Here's what my overhead costs are. So my accountancy fees, my bank charges, those things that sometimes you forget when you're in business that we've all got to pay for. And actually that will return our net profit before tax. And then actually one of the great reports to use is a budget variance report. So alongside how many invoices have been issued and what's my average invoice value, sometimes it's that, where are we? And some months you're going to be really strong and be ahead of budget, but you then may, especially if you're a seasonal business, you may actually see some dips. But the way that we've tended to work with clients just around budgeting and using that as a core indicator is we actually customize and build out that report to go, here's my budget per month. I'm replacing budgets with actuals. But ultimately, what's my annual budget and how far overall short am I to help drive? Have I got to go and sell more in the remaining 3 months to meet my budgeted target, which is ultimately going to give me that big number of net profit that as a business owner we all want? That's
right. And actually, once you know what that revenue target is every month and you know the cost. So if you know you've got, on a very simple term, you've got to get £5,000 in. Let's say if you're a small business, you're on your own, I need to get £5,000 in because I've got £1,000 of overheads and it's going to cost me £2,000 to deliver my service, and that'll leave me with my £2,000. So all those kind of numbers, people know those in their head, but they don't know where they fit in on the spreadsheet. They don't know where they fit in on the accounting software. So getting things into very simple terms is what I try and do with clients first, by looking at that P&L, looking at that exec summary. And then you can suddenly think, well, actually, I need £6,000. So how many customers more do I need to get that? So we try and then bring it together, and what the business owners actually need to focus on then is let you worry about doing the maths bit.
Yeah.
But once we've pulled the facts from the maths, we say, okay, so I need 40 customers every month or 50 customers every month. And then it's the business owner's job to work out how much they've got to spend to acquire those customers.
Yeah.
So all these are interrelated, but for business owners that don't like numbers, actually to concentrate on how many customers I need is a much easier thing to focus on, because they can do that.
Yeah.
And they know if they know where their customer's hanging out, or they know where their customer, whether it's through networking, they meet them, or they've got an online service or whatever it is, they can concentrate on making sure they convert the customers. And then that will, as you said, drop down to the bottom line.
Yeah, absolutely. I think actually then, so we've kind of got that, we know we need to measure and we need to really try and get a handle on what we do. And we appreciate that not everybody is numbers focused. So yes, number of clients, that tangible, breaking it down into smaller, less daunting targets. Actually, I need to sell 10 customers. I need to onboard one new client to help me afford, is a lot more achievable. But how then can we really harness the power of accounting software? Because we're putting all of this data in with all of our sales invoices and all of our bills. How can we, and I'm probably going to point this at you first, Paul, how can we then start to shape and benefit the business owner with the tools that Xero has built in before we talk about additional tools that we can use?
Sure. I want to, I suppose I want to focus a little bit on a particular thing we have in Xero called analytics. Now, analytics is something we released a couple of years ago, and it's a free tool. Initially, it's just based on 30 days, but there's the option to go up to 90 days from a cash flow perspective.
Yeah.
But there's a business snapshot facility in it, which is a simple one-page summary of your business as of right now. And the beauty of it that I love about this business snapshot is next to every figure, whether it's a percentage or a ratio or a debtor days and anything like that, there's always a little question mark or a little eye next to it, which breaks it down into simple English for non-accounting people.
Yeah.
And whenever I see a small business read that, they go, that's what it means.
Yeah.
So we're really trying to break that barrier down of communication, of saying actually accounts and the numbers of your business, it's understandable and you can look at it and you can understand it. So we're really focusing on that at the moment.
Well, I think Xero have just actually done a little bit of a tagline rebrand, haven't they? So they've gone from being beautiful business to...
Well, we've got a couple supercharging your business.
Supercharging the business, absolutely. And I think actually from that analytics page, I think what I like is, and we've definitely got clients in this sphere, numbers on a page mean nothing to them. But when you suddenly start to see graphs on that business snapshot of how are we tracking this year against the same period last year, that gives clients a big reassurance of, oh, I'm doing better than last year. Not just in turnover, but in my costs. My costs are controlled.
Yeah.
And the thing that I absolutely love about that analytics is the fact that you can see, without trying to scan a profit and loss report, the biggest areas in your business where you are spending money.
Yes.
And that ability then to click through on that £20,000 in marketing, let's say, I can click through and actually see every single transaction and every single bill that we've paid or processed. And it then becomes quite tangible, because I think sometimes you go, I'll commit to that and I'll commit to that.
That's a really, really relevant point there, because we all know that you should be spending on marketing. Let's be truthful. There's a lot of people wear the badge of pride. I don't spend anything on marketing, but they tend to be businesses that haven't got a rhythmic acquisition of customers. Yeah. So if you're going to be spending on marketing, you do need absolutely to be tracking the results of that. And you can find, if you use what you just said by going through your marketing line and seeing all those grouping them into, well, I spent that to get this type of service sold, because most businesses have more than one service or more than one product. I worked recently with, I've been working recently with a fantastic website design and graphic design company. And it wasn't until they really started, because they're creatives, and a lot of creatives, they go, I don't like numbers, but we really drilled into the numbers, and they were on Xero too. And we pulled things out. And what they also did is, in the turnover, in the revenue, they started organizing their invoices by their products. So they had one for hosting, they had one for websites, they had one for graphic design. And suddenly they realized, when we analyzed what they'd spent on marketing, what they'd spent on production, but most importantly, what they spent on time, they suddenly realized they got two very profitable areas and one that was actually losing money. And if they'd just bulked it all together, they'd have got a cost for sale over everything of, I don't know, 68% or whatever it was. But in truth, they hadn't, because their graphics, because of the cost of the print and all that, which they hadn't bulked together with that, their profit margin was tiny. And they realised, and they would never have done that by just reading a report from an accountant and going, oh yeah, okay, sign it off. That just isn't the right way to run a business in the 2020s.
So Jackie, I get the breaking down that profit and loss to be a little bit more granular. So a snapshot, businesses can see income and expenditure by, let's call it, type of sale and type of cost. But something that Xero offers that I think is really beneficial, certainly for those growing businesses that have got different sectors or different income streams, is to use Xero's own tracking. So it takes the standard category codes, but when a business owner raises an invoice or processes a bill or a receipt or a bank transaction, they are able to categorize it into one of these tracking categories that allow them then to shrink their profit and loss to only view that one tracking category, which that example you said where graphic design was not worth them doing because they were losing or not making a lot of money, that's really then powerfully shown and can be dealt with quickly before they are so heavily entrenched.
Well, exactly.
And the losses run away with them.
Yeah, you're absolutely right. But not only does it allow them to act swiftly, it also means that they can make decisions about pricing based on reasoning, not a finger in the air or what shall I charge. They can actually say, well, this is what I need to charge to make this a profitable part of my business, or actually, do I want to offer this part of my business? So I think asking your business questions, which we should all be doing all the time, actually the answers are nearly always in the numbers.
Absolutely. And Paul, is there anything else that I've missed from a Xero analysis perspective that actually our viewers and listeners would benefit from exploring with their accountant?
The other thing that's coming to mind really is things like Xero project. So, tracking categories are great for a business got different areas of the business they want to track and monitor and review. But in terms of what projects does is allows the consultants, service-based businesses to actually create jobs within Xero and track the profitability of individual jobs.
I guess that's great where it's running over a couple of months or even in some cases a couple of years where to run a P&L suddenly becomes quite awkward.
Exactly. But this is another great tool that we like using, time, expenses, things like that.
So Jackie, we've spoken about all, and Paul, to be fair, we've spoken about all of the KPIs and how they're going to allow a business owner to understand what their business is doing. But actually now, so we know what they're doing and what the KPIs are actually telling us, but how can a business use those to actually then make better decisions?
Well, I think I said previously, the answers are always in the numbers. If you want to buy a new piece of machinery or take on a new member of staff or put your prices up, you shouldn't just be making that from the gut, because sometimes our gut is right, isn't it? But the truth is, when you're in business, you've got to have the evidence and the reasoning behind that. And looking at your business numbers will enable you to look at whether you can afford to do that. So the problem is, in this day and age, because we have so many apps on our phone and we can check our bank balance any time, business owners think, oh, great, I've been paid. That means I can spend this. And actually, I ban my clients from looking at their banking app you shouldn't be looking at your banking app, because that is just a tiny minute of where it's telling you what cash is in there. But you don't know if all of that is due to go out or some of it is. Yeah. So going to your Xero will give you a much better indication of where your business is sitting right today.
Yeah. And if you're not sat in front of a computer or a Mac, Xero has got both a tablet app, which is a slimmed down version, but it gives you those core details. And actually you go one down from that, it's got one on your phone. So a little bit like you, it's about educating clients. Go and look at Xero on your phone rather than go and look at your bank on your phone, because you get a greater insight. Paul, is there any indicators that you think a business should probably put at the top of the list, and those that are nice to understand, but probably doesn't make any material difference if they don't understand?
Yes, so I'm not a business owner, but from a Xero perspective, we produce a report quite regularly called the XSBI, so Xero Small Business Insights. Every time we produce this report, it always highlights the debtor days within a business.
So debtor days, just to put it into, let's call it our language. So accountant language, debtor days in
money owed to you.
Yeah, money
owed to you. So it's we did a lot of research on this, and each year we keep looking at this to see if we're making an impact. So in terms of our research, if you're not using any accounting software at all, and you're just using spreadsheets or a carbon copy book, on average, it's 57 days for your invoices to get paid. If you are using Xero, good. You're on Xero, it takes on average 24 days for a to get paid. If you are using Xero with a payment solution,
so such as Go Cardless, Stripe,
on average payment is 10 days. Mm-hmm. So for us, if you follow Xero on social media, we go to Parliament. We all our Xero senior leadership team are there, just supporting small businesses about reducing debtor days, and we're a firm believer of actually using payment providers with Xero. Yeah. So the key metric on one of our reports is your debtor days. So once your data starts aggregating, it will give you an indication of how long it takes you to get paid. So that, for me, and a priority for Xero, we're really trying to help bridge that gap. Because at the end of the day, cash is the lifeblood of UK business.
That's absolutely right. I work with a lot of trades, have done historically, and that is their biggest problem, actually, not getting the money in. Because just historically, for whatever reason, if you're a trade, you don't expect to be paid until afterwards. Yeah. And then there's all of the little snaggy bits, and you get paid another week later and another week later. And at least in Xero, and by having a scorecard of sorts, you can work out when you're going to have that cash flow in, which allows you to buy the supplies for your next job. And it is absolutely key. I would say it is the lifeblood, having the cash, but not what's in the bank. Yeah. The real cash that is yours to spend.
That disposable cash is probably the right phrase.
Yeah.
Fantastic. And that leads us probably nicely on to, we've got all this cash in the bank. We know what our commitments are now, because Xero is actually giving us that insight into, and if Xero's not giving it, your accountant is doing it, giving you that insight if they're managing it on your behalf. But as a growing business, there is a temptation, I think, to go all guns blazing, and we're making money, brilliant. But what common mistakes do you see? I guess you get lots of businesses that are on that growth journey, but they've plateaued and they're now going, well, how do we go next? Yeah. So what common mistakes do you tend to see these businesses make, and what's your advice to avoid them?
There's many different ways that when people plateau, that they've missed the point a little bit. And most commonly, it's back to, again, something I've said previously, is that they have this badge of honor of not spending on marketing. Because lots of businesses get quite good amounts of revenue coming in, and they kind of find themselves in a place where they're making a nice little bit of profit, but they're not quite sure how they got there. Yeah. And suddenly they have to realize they've got to systemize stuff. They need to understand what they've got available to spend to acquire a customer. And that's huge. That is a huge thing. Most business owners that you ask, you say, well, what are you prepared to spend to get a customer? They won't have an answer for you, because they go, I don't know, £50, £100, £500. When I was running my temp business, when I was still in that business, when I finished there in 2021, we were allocating £575 to get a customer. So I knew.
What was that average customer return for you?
So that was about £7,000.
So you're talking probably somewhere around 8%.
Yeah, that's right.
Yeah.
But that allows for the fact that you do get some word of mouth and some not. So 575 for us was great, as I knew that would work for us. If you're a business that's got a recurring, got retained customers where they're paying you monthly, you might actually use the whole of the equivalent of the first 3 or 4 months spend to get that customer, because if you know they're going to stay with you 2 years, 3 years, or you can afford to front load, you can definitely afford to front load as long as you've tied them in a little bit. So it's being savvy about understanding the profitability, understanding the value of a customer, whether that be a one-off or a lifetime value, and actually doing the thinking behind it to work out you can spend money to get a customer. I'm meeting loads of people scared of Google and Facebook. Yeah. Because they go, but they just take your money. Well, they do take your money, but if you're doing it properly and you're following up properly, I'll guarantee you, if you put the money in at the top, more money comes out the bottom. Otherwise Google and Facebook wouldn't be doing their job and they wouldn't have more people investing in it.
Yeah. Paul, from you going out and visiting other sort of partners, like you do with us, what tends to be their feedback on their own customer acquisition? Because we tend to find that a lot of our clients are coming on the back of poor service, but some of them is, I just need an accountant. So I'm really intrigued to understand, if you like, just from almost an accountant's perspective, what's their common mistake that people come to you and go, oh, we should have done, or we need to do.
So acquisition of new clients for a practice.
Yes.
Yeah, just the reliance on, linking back to what you said, Jackie, the reliance on referrals now. The industry's changing, so the accounting space is changing, and you'll find that a lot of modern practices are social media influencers and are online, and the new generation of your clients coming through are not the ones that are going to look through the yellow pages and probably speak to their friends. They're going to look for TikTok. They're going to look at social media. Yeah. So I'm seeing a lot of that.
Yeah. And I think that very much resonates. And I think that's a business thing now. The generations that we're working on, where we're not on Gen Z anymore, whatever it is now, if they cannot do it on their phone, they don't want to do it. And I think that there's very much a pivot in all businesses to now look at those acquisition routes. But I guess one of the things that really does stick out when we talk to clients about, well, why haven't you met those targets, has always been a spent in the wrong areas. Mm-hmm. And it's, I think, the piece of work that we now try and encourage clients, and it comes back to exactly what we've said before, is look at where you're spending and what return is being given. And that data does exist at hand in a bit of software.
Exactly. Because if you're doing a campaign on Facebook ads, say, and you don't measure what you actually sell off the back of that, then you've not done your job properly as a business owner, have you? And the good thing is that Xero can track that because it'll know exactly what you spent on the leads. The important thing for you as a business owner is to make sure that you're doing the follow-up, and you're then attributing that follow-up that from that campaign. So if you put a flyer, you need to put like a code on so you can track it's from the code. If it's a Google My Business profile, you might get a code or a particular phone number, a tracking number. And those all you can work with what you're saying, which is we can look at the costs and then look at the revenue that's been created and see what things work. And that you can all pull out for us as business owners, and without us having to do the hard work, which is great.
I guess we've all very much hit on the biggest mistake that a business makes when growing is chucking money at marketing, whether that's a lot of money or not a lot, but not following up on that money, whether that's a little bit of analysis on, have I had an ROI, return on investment, or actually, am I chucking my money down the wrong channels? I've been there. When I first started, I did everything via Facebook, but not targeted ads. It was literally just, here I am, and I blew £1,000 in 3 weeks and got nothing. And then when you start to talk to the experts and they start going, well, actually, did you target it? And did you time it? And is Facebook really where you want to hit your clients from? So I think that has very much sort of given us, if you're going to want to continue to grow your business, marketing is at the core, but actually targeted marketing.
Absolutely.
And I know we're not, we're just talking about KPIs in this episode, but actually that metric of return on marketing spend is probably the single biggest one outside of that big flashing what profit have I made. I think that's where we very much
and just as a tip for all your listeners, I have one really strict rule, and that is don't ever do a certain type of marketing because somebody rings you up and offers it. Because if somebody's ringing you up, they're selling space. You need to do your marketing based on exactly what you just said, where your client hangs out, who your client is, number one, and where they're hanging out. And that's where you need to be advertising. That's where you need to put your money. And then you need to test it and track it and split test it and make sure that you hone in on the things that are most profitable. And that's where Xero is really supported.
Brilliant. We've spoken about trends and KPIs, and I think that's really easy for, let's call them standard businesses that don't have to deal with seasonal trends. So those ice cream men or those theme parks. So how easy is it to manage KPIs for seasonal based businesses?
Well, I think the first thing that, again, with clients that we look at from their balance sheet, from their P&L is, and I might have used the wrong word there, balance sheet, apologies. The first thing we need to find out is what their break even is.
Yep.
So if we know what the break even is, so for example, my temp business, I knew that we, across the year, every month we needed £33,000. That's what we needed to just pay the staff, pay the rent on the unit, all those kind of things. Now, I know as well that in January, February, March, October, November, no, I'm deadly serious. 7 months of the year, we would not turn over £33,000 because that's not how the wedding industry works. You know, not many people get married in a tent in January. Let's be truthful. So as a business owner, you have to know what's happening in your business, what's happening in your industry. And then you need to plan for that. And that's back to the budgeting and back to the following the trends. And that's where your graphs are really, really useful, because actually what I knew is that by the end of September, I needed £200,000 in my bank. Yeah. Because otherwise I wasn't going to last till next May.
To meet those commitments.
And it's really, really important. And if people are just looking on their banking app, they're going to go, woohoo, I've got £200,000. I'm going on holiday. But actually the truth is that was not pure profit. That was just money that was ready to pay us through the winter. Now, ours was very, very extreme, a bit like your ice cream.
Yeah.
But every business will have some level of seasonal trend. And the thing to do is to track that data and have a look, because...
And I think you hit the nail on the head around look at your bank and see cash. So even if you're not working with a business coach and you're managing your own business and your accountant sees you once a year, but why? See them quarterly. I actually think that using some of the challenger banks, and again, we're not promoting challenger banks by any stretch against high streets, but have a look at the likes of a Starling or a Monzo that allow you to operate with pots inside your bank account. That means you can tuck away money during the flush times that you can then pull back in those lean times. And that's just a little piece that we've learned with a couple of the businesses we work with, that those pots, again, it's just a KPI in terms of we know the peaks and troughs, and that allows them to actually survive. We've spoken lots about how a core accounting system can really help drive a business, not just in its growth, but in its understanding. But actually, alongside an accounting system such as Xero, there are, I'm going to use the word just because I like it, a plethora of apps that support specifics within business. So Xero is fantastic at giving you that high level detail and insight. But as we've all alluded to, other than a few snapshot reports, it's very numbers driven, which is what all accounting software is. But actually, there are now tools, apps in an ecosystem or in an app stack, and talk to your accountant if you want to know some specifics, that are either industry driven or take that data that Xero holds in its rawest form and converts that into, I'm going to call them pictorial, something that's a bit more tangible for those non-numbers people. Paul, you're heavily involved in Xero and software in general. What supporting tools would you recommend those business on a growth journey either work with their accountant to implement or that they could take even in standalone mode?
Sure. You touched on it. We've got an app store.
Yeah.
Just like the Apple store, we've got a Xero store. And we currently have over 1,000 apps linked up.
There's an app for everything.
There's an app for everything. And it's brilliant because it just takes Xero to that next level. So, Xero is a great core accounting bookkeeping product and gives you valuable insights and allows you to see the health of your business. But with the app store, exactly what you said, Paul, it allows you to, especially you can go into it, you can specify what industry you're in, and it will serve up to you a number of apps that complement your industry. You may want something. My favorite of all time, there was an app there that only specific and looks after pet hotels. It's that specific. But to answer your question, there's one piece of advice I could say is that you could easily get lost on the App Store. But if you can get two products that can complement Xero in terms of automation and insights, that's all. I'm just going to put them under those categories. Automate getting all your information in as quickly as possible.
Yeah.
There are tools included with Xero and there are others out there as well. But also in terms of their outputs, Xero is aggregating a lot of data for you. It is serving you up with some valuable insights, but there's some other apps out there which will take that data to another level and allow you to make some great business decisions and help you get to where you need to be.
Fabulous. And let's name drop a couple. So on that automation going in, we as a firm are very heavily entrenched and support Dext as a receipt automation tool. And lately we've been working with Ep1, an alternative to Dext, and both do the same. And it's usually around cost and number of users on the input side. On the outputs, we work with Sift. So Sift is a great reporting tool that literally takes that raw data and can not only give you pictorials, but it will actually then help you do almost the what if statements. So if I want to take a new employee on, what does that look like in my forecast? If I increase my revenue by 5% by whatever means, whether that's a price increase or more volume, what does that do to my bottom line? But all on little sliders and very simple data entry. So I agree. 2 points, get the data in, remove human touch points, because that's going to free you up to go and do either more in business or actually enjoy a little bit of family time. And then at the back end, use those pictorials, especially if you're growing and need to present to financiers, investors, because it will just give them greater assurance that you understand your business. And then we mentioned them earlier, but payment tools, both in and out, are now massively important in business.
Yeah, I suppose I want to demystify a few myths with the payment tools, because I think there's a perception in the industry they're quite expensive to use, and it takes a clip of your revenue as such, really. But when we've done research behind it, the cost of having that debt on the shelf versus getting a payment in quicker, it far outweighs that little couple of percent charge for getting that revenue in quicker.
We did the analysis for a client that had just in terms of acquiring payments, had got the terminal, and they were paying for the virtual terminal, and between two of them they were paying £35 a month, and their average collection on the credit card at that point was about £1,000 a month. Well, actually the fees on £1,000 a month let's take Stripe as an example. Stripe can vary between 1.6 and 2.9% depending on your charges. Well, you go, actually, I've taken £1,000. It's going to cost me £2.90. I only pay when I use it. So why wouldn't you look to have those automated payment tools, a click on your invoice to go pay now? I haven't got a terminal I'm paying huge amounts of money for. And actually, I'm getting that money in And if we want to go really to the 8th degree of using something like Stripe connecting to Xero, it automates the payment piece in Xero. So that invoice gets paid off, the fees are handled, and the money just hits your bank account.
Yeah.
So again, looking at those third-party tools. And I think actually, I suppose really to kind of bring the whole sort of KPIs and business support round, technology since COVID has absolutely spiraled, and we've seen like the challenger banks really become key. Xero introduced analytics and Analytics Plus on the back of COVID, along with a lot of additional support reports.
Mm-hmm.
But where do we see financial technology going? And Jackie, shall I hit you first?
Well, all technology, isn't it, Paul?
Yeah.
And financial, of course, will be part of that. AI is there. And it's going at the rate of knots. I was lucky enough to be at a conference with Stephen Bartlett a couple of weeks ago, and he was talking about the speed of change in our world now, and in the finances, in business, we have to embrace it. Yeah. And my advice is, don't be scared of AI. What you have to do is embrace it, because back when the internet came along, Steve Jobs said something along the lines of, the internet won't replace humans, but it'll replace the humans that don't embrace it. Those businesses that didn't embrace the internet, they all died, didn't they, in the early 2000s. The businesses now who don't harness AI in a positive way will just disappear. Yeah. You've got to, and that's why we've digitized tax now. We've got Xero on our phone. We've got all sorts of things, but we have to embrace it as business owners. We can't shy away. No. And there's so much great AI out there. It's not all just ChatGPT. You've got all sorts of zaps that will push information from one place to another. And it's all at our disposal, and it just makes us more efficient. It'll give us our time back, like you said.
I think that's the absolute key with AI. It is about, certainly for us in our business, it's about automating the tasks that release us to add more value to business. And I definitely know that Xero have something that was announced at XeroCon late last year. Just ask Jax. Just ask Xero, which is Xero's interpretation of that ability. In fact, no, I'm not going to say it. I'm going to let Paul just sort of where that next level of tech is coming from in Xero's world.
Yeah, so AI has been around for a while in Xero. There's a lot of
machine learning.
The learning technology rules, etc. That's always been around, but I suppose releasing Jax has put a label on it saying that this is our AI bot. Mm-hmm. It's released now in its early stages, but the idea of it really is just to release those repetitive, mundane tasks and just provide insights at the drop of a hat, really. So just to get a snapshot of your business really quickly and get really...
Yeah, and the thing that I'm really excited about, and it's probably for trades more than anything with that evolving technology, is the ability on your phone to actually, instead of sitting there typing into your Xero app about raising an invoice or a quote for a customer you've just seen to lay their carpets or supply carpets or whatever it is, you can literally, using Jax, say, please raise a quote to Mrs. Smith of this address. I want this on the quote, and it will raise it and email it, and you've not touched and typed anything. That's where I believe that tech is going to really take us forwards. And finally, before we wrap it up, a dedicated question. We've tried to avoid the questions today, more informational. But Jackie, we'll start with you. If you could give one piece of financial advice to a business owner looking to scale, what would it be?
It would probably be to ensure that you have moved even a tiny percentage to begin with, some profit into a pot separately. Yeah. So that every single time you pay, even if you're just starting out in business, when that first check, I remember when we got our first ever check through, it was a check in the old days, when that first money hits your bank account, even if you only put 1% aside to begin with, get into the good habit of putting that profit away. And as you get better and more customers and you start to grow, raise that percentage from 1% to 2%, then 2 to 5%, then 5 to 10%. Because if you can then start putting away 10%.
For things like your tax bills and those.
Oh, no, as well as your tax bills. Because
okay.
that profit, that is your reinvestment.
Yeah.
That is either your reinvestment into your business, or if you don't need to invest into your business at the moment because your operating expenses are all, your operating cash is there, then that's yours.
Yeah.
That's your bonus,
Fantastic.
isn't it? So I would 100% say, do it from the start, because it's much harder to claw back that profit that appears at the bottom of a spreadsheet.
Yeah.
Actually, if you've got it there, it's safe and you don't touch it.
Yeah.
If there's time, I'll just tell you a little story from. But this is what I saw this from Mike McCallovich, and this is what really made me understand what he was talking about. If you get a tube of toothpaste, when you first get a tube of toothpaste, you pop the toothpaste on, you brush your teeth, you're fine. You do it again, and you go quite, big, nice bit of toothpaste. When it gets to the end of your toothpaste tube, what do? You curl the end up.
Oh, yeah, I'm tight. I want to empty everything out of it.
Yeah, you do. And doesn't that last bit of the toothpaste tube last as long as nearly the whole rest of the tube? Now, think about your bank account like that. Look, think about your operating expenses, your cash as that. Because if you've only got a little bit left at the end of the month, if you've got £990 in your bank instead of 1,000 because you've put that 1% away, you'll manage.
Yeah.
You won't go and pull it back.
Yeah.
And my piece of advice is take that bit out, get in a good habit of saving your profit, and then use the toothpaste tube until it's really empty. And if you haven't got any, well, you can't brush your teeth. So those suppliers, they just have to wait a little bit.
Great analogy. And Paul, have you got one piece of advice?
Yeah, I've got two.
Yeah, okay, you can have two.
I've got a head and a heart.
Okay.
So in my heart, I always believe on having a why.
Yeah.
In a business, why do you get out of bed in the morning? Why did you set up your business? What drives you? What is that? So I always believe in having a why. And if you ask somebody once, if you ask someone 3 times, I'll always tell you a different answer from the first and the third. But also, I'm just going to bang the drum about cash flow. Really, just payment solutions. Just have a payment solution. If you're a tradesperson, do your job, send the bill right in front of them. 9 out of 10 times they'll pay you straight.
Yeah, fantastic. And right, before we go, I've just got a little fun one for you, Jackie. And it's not really fun because I think it's pertinent with what we've chatted about today. But what's the best single business decision you've ever made in your career?
Actually, it's to be a business owner.
Okay.
Because I was a teacher for 20 years.
Oh, wow. Didn't know that.
And much as I love the little darlings, being a business owner, it means it's all down to you. It's all your fault, shall we say.
Yeah.
It's all down to your choices. You have choices. You have, like you just said about the why, you have a choice whether you get out of bed in the morning or you don't. You have a choice whether to work with this customer or not to work with this customer. And I think being a business owner in our time is an honour, actually. I think the country that we live in, for all the problems it has and all the moans and groans, as a business owner, you are in control, not Rachel Watson in the government and not Downing Street. At the end of the day, you are in control of your destiny, your family's well-being. And I absolutely say this is a great time to be a business owner. So going into business, that was the best decision I made.
Fantastic. Okay, so are you, as a listener, up for a cash challenge? We want to actively encourage our listeners and viewers. We want to challenge you to implement one KPI tracking tip and share their results. So what are you going to implement going forwards? That wraps up today's episode on planning for business growth with financial KPIs. And I know we've diverted around some of the other challenges that businesses face. A massive thank you to Paul McKay from Xero and Jacquie from Vector Business Coaching for sharing their expertise, and to all of you for tuning in. If you found this helpful, don't forget to like, subscribe, and leave us a review. It really helps us to reach more growing businesses just like yours. Our next episode will be on your end-of-year accounting and how that's made easy. Tips for getting your records ready. A panel discussion with some fantastic accountants. If you've got any questions or topics you'd love us to cover, please drop us a message on our social media channels or email us at info@cas-online.co.uk. Thanks again for listening, and we'll catch you next time on Giving You More Than Numbers, CASS's Business Support Podcast.
Thanks for listening to Giving You More Than Numbers. Subscribe for more business insights from Team CASS.